Good afternoon. You're watching Business World Live here on One News. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Monday. Okay, not the most eventful of days for the equity space this Monday. So there's little movement among local stocks here. Losses muted today with the PSEI capping off Monday, the week's first session at 6,968. But one sector that has been sparking some excitement here for the PSEI would have to be the telco space. If we try to take a look at our top three players, at least for today, look at Globe jumping close to 8% today, extending its rally for a second day. So is Internet player Converge, the day's second best performer, up 3.25%. PLDT not to be left out here, increasing 1.6%. Globe now at 3,090, while Converge is at 33 pesos and 35 centavos a share. Now, during the broadcast this morning, Robert Sampson of First Metro Security said telcos continue to benefit from this pandemic as remote setups continue. But as for these two stocks, I'm referring to Globe and Converge, he says with a recent rally, they might just be pricey at the moment. So he cautions against positioning for the short term. One good option, he says, would have to be PLDT, as there might be more upside for the telco giant PLDT, at least for today, ending the day at 1,469. Now, enough of that. Off to REITs we go. We're a few weeks away from the listing of the country's fifth REIT. I'm talking about Megaworld's unit M REIT. Now, offering will start tomorrow, September 14. The company is really looking bullish for their prospects. They hope to grow asset size to 1 million square meters in 5 to 10 years. That's enough to make them the fastest growing REIT with the longest expansion pipeline. Now, in 2022 alone, they're looking to add 100,000 square meters to their portfolio, which should bring them to 324,000 square meters by year end. This level of optimism also hinged on the prospects of the BPO sector here in the country, and they hope to maintain their strong footing as a landlord of choice for the industry. MREIT's initial portfolio, again, to give you an idea, that's going to involve 224,000 square meters of assets. We're talking 10 prime office buildings in 3 key locations here. That includes Eastwood, McKinley, and Iloilo, with offer price at 16 pesos and 10 centavos a share. Now, while we're weeks away from MREIT's debut on the local bourse, RCR or RL or Robinson's Land Commercial REIT is going public. That's going to be tomorrow. Industry sources are saying that's already well oversubscribed, with market capitalization at 64.2 billion pesos at a price of 6 pesos and 45 centavos per share. That's going to raise 23.5 billion pesos, making it the largest REIT IPO to date in the country. 3.34 billion common shares were sold, with an over-allotment option of 305 million common shares. The portfolio includes 14 properties, mostly involved as well with IPOs. So lots of exciting news here for the REIT sector here in the Philippines. Again, with our RCR at least debuting by tomorrow. Here are other headlines we're keeping our eyes on. Fitch Solutions is seeing the political jostling in the country's ruling party as a threat to policy making. The analytics group says in a review that the infighting within PDP Laban could provide an opportunity for opposition candidates, but the agency notes that uncertainty remains high on that front, with no exact candidate named until now. There are currently 2 factions in PDP Laban, a group led by Energy Secretary Alfonso Cusi, which is backing the Go Duterte tandem, and the group of Senator Manny Pacquiao and Coco Pimentel. Fitch Solutions says the politicking may likely distract the government from policymaking in the near term, and may even sow disunity among officials. With this, the Debt Watcher has lowered the country's short-term political risk score from 64.8 to 64 out of 100, signifying possible near-term political instability. Now, Presidential Entrepreneurship Advisor Joey Concepcion is renewing calls for granular lockdowns, calling it a crucial step to unlock additional pandemic funds. In a Go Negocio forum, Concepcion said imposing granular lockdowns is the country's best way to coexist with the virus. Concepcion has also previously backed greater mobility for fully vaccinated individuals as a way to slightly reopen the economy.
Have to find a solution to coexist with COVID-19. If we are unable to find that solution, I don't think the government can continue funding massive amounts on all of these medical expenses, from testing to tracing to vaccination, the ayudas, and the list goes on.
The interagency task force is still finalizing the guidelines needed for the implementation of the pilot alert level system in NCR. MECQ status in the capital region lapses on September 15. Now, a Barcelona-based think tank sees slower recovery for the Philippines in the next 2 years as a result of the COVID-19 impact. FocusEconomics slashed its 2021 growth forecast for the country to 4.7% from its previous 5.2% outlook. It did the same for its 2022 projection, slightly lowering it to 7% from 7.1%. The group noted slow vaccinations and uncertainties in next year's elections for the outlook cut. However, it sees higher exports and remittances doing the heavy lifting for the country. Electronic exports are seeing continuing gains in the remaining months despite global supply chain disruptions. IHS Market says there's strong demand for electronics as driven by the shift to remote work and online shopping across the globe. Now, as a testament to that, for the month of July, the country's electronics export climbed by 10% in the sector. Keep the momentum going. Let's ask semiconductor and electronics industries in the Philippines, or SEIPI President Dan Lachica. Good afternoon, sir.
Good afternoon, Jess, and to your viewers. How are
Okay,
you?
after that report, Sir Dan, is the worst already over for the electronics sector here in the Philippines? Are we already riding that recovery that at least is being seen globally?
Well, it seems like it. However, we still need to be cautious about assuming that the worst is over. It may not be just because of the variants that are out there and the availability of vaccines. But as you know, as I mentioned last week, the electronics industry seems to be recovering. It is recovering. In fact, year to date, we're at $26 billion, or 61% of the country's total exports. And at this pace, we could eclipse the last record registered in 2019 of $43.3 billion. But then again, this remains to be seen. The global demand is strong, continues to be strong. But then again, as you mentioned, we're still experiencing some semiconductor wafer supply issues and other materials like leads and all that. But assuming no major disasters happen in the global supply chain in the pandemic, then we should be well on our way to recovery.
Okay, good thing that you mentioned that. I mean, I was about to ask, are we over the hump now when it comes to the supply gap? How then, given that there's still at least existing shortages, how is the local sector responding to that high demand for electronics? And what are we doing here, at least from our end, to at least address that?
Well, locally, electronics companies, the exporters, are running at 100% clip. We just have to manage the supply, like I mentioned. However, we are beset still with high operating costs, primarily in logistics. The shipping costs are, exceedingly high, especially for shipping costs from international ports, vice versa, and even to the United States. So that continues to be a problem. And then the other thing would be the vaccines. NCR is better off than other regions in that hopefully at least 50% should be vaccinated by September, maybe more. But for the rest of, say, for example, in Region 4A, where 70% of our electronics companies are, it's much slower, and this is primarily driven by the vaccine supply. Although in the Go Negosyo Bakuna session that you featured earlier, Secretary Galvez said that we expect another 10 million, well, about 16 million doses coming in September, from about 10 million from COVAX, 1.5 million from Pfizer, and maybe
Mhm.
2 million from Sinovac, in addition to the 600,000 for AstraZeneca that's going to come this week. So the hesitancy among workers is lower, but as much as they want to be vaccinated, then we just need to get the vaccine supplies in.
Mhm.
So as you know, this is going to be a big variable because, especially with the Delta variant, where the infectiousness is 3 times more than the Alpha or Beta variants, it's still a big risk.
Mhm. Now, Sir Dan, I want to focus first on the first half of your previous answer, wherein you did say that there's a rise in cost here. How much of an upturn did you see in cost here? Especially, we're talking about rising costs in raw materials, not to mention increasing shipping fees.
Well, the biggest cost driver still is power. We're experiencing like 40% higher power costs compared to Vietnam, for instance. But logistics costs, gosh, it's anywhere from 10 to 30% higher. I mean, believe it or not, it's cheaper to ship from, say, Singapore or Hong Kong than it is to ship within the Philippines. But even so, there's a couple of problems with shipping, but that is the availability of space, as well as because of the pandemic, shipping costs have escalated depending on the port of destination, anywhere from 10 to 20 times the normal cost. So that is creating a big challenge for the industry.
Okay, interesting that you mentioned that shipping costs, at least even domestically, is higher compared to our neighbors in the region. But one more point of concern here, of course, how is the Delta variant posing a risk for the sector, especially with the surge now triggering a different policy direction here via granular lockdowns?
Well, the vulnerability to Delta is, needless to say, higher. Not only is the transmissibility higher, but also, even some of the vaccines that we've acquired, the efficacy might not be as high. Although it's still a fact that if you're vaccinated, regardless of the brand,
Mhm.
the probability of major symptoms or hospitalization is less. But then again, this efficacy of the different variants varies depending on the brand compared to Delta. The challenge is, while the infection isn't spread within the highly controlled environment of the electronics manufacturing line, they still have to go out, they still have to go home, and for those, they're being shuttled to the factories, but they still have to walk or commute from the shuttle drop-off points to their homes, and this is where the exposure is a concern. So we just have to remain vigilant, and we have to hope that the availability of vaccines is accelerated. In fact, uh, one of our asks from government is perhaps the possibility of, when data obviously is supportive, to allow certain vaccine brands to be given full authorization so that the companies can order directly and control the destiny of the workers, so to speak.
Mhm. Of course, like what you mentioned, a lot of that hinges, of course, on vaccine rollout. But now that an alert level system, ideally, or at least government hopes to put that in place by September 16, what guidelines do you want in place as we transition to smaller lockdowns?
Well, the idea of granular lockdowns seems to be more attractive. I don't know that we can afford too many of the ECQs, the full lockdowns. Then again, from what I understand, the GCQ well, the IATF will discuss it and make a decision shortly, maybe this afternoon or tomorrow. But as I understand it, the proposal really is to have 4 alert levels in GCQ. The fifth one, if ever, is essentially an ECQ or a full lockdown. But I'm not quite sure yet of the guidelines for the different alert levels, going from 1 to 4. So we're waiting for that. Now, the concern still is uninterrupted supply of materials and workforce to the industry, because from an economy perspective, we still account for 61% of the country's exports. And like I said, at $26 billion, that's going to be a big boost to the economy. And hopefully, we're still at a pace to grow at least at 7% for the full year. And from all indications, given everything that we've seen so far, I mean, if you just kind of translated this 26 million to see what it's going to look like by the end of the year, it's $44 million. So that's certainly something worth looking forward to. So we just hope that no major disasters happen, whether they're vaccine supply or more lockdowns. The other issue that we're seeing is, the travel bans, right? Because there are certain red or yellow or green countries. And as you know, most of our members have expatriates coming from different countries, and it'll be I guess an interruption in the operation if these expats, because they have to go back to their home bases, their headquarters for meetings or whatever. But for them not to be able to come here, obviously there's the option of virtual meetings, but physical presence is not a substitute for virtual conference is not a substitute for physical presence. So that's the other thing that hopefully the DFA will clarify and allow, especially for vaccinated travelers, to be able to return to their manufacturing facilities in the Philippines.
All right. Again, the sector is still at least looking bullish for the year, optimistic, holding on to that 7% growth. Thank you very much for your time this afternoon, SEIPI President Dan Lachica. Thank you, sir.
Thank you. Good afternoon and stay safe.
You too, sir.
Bye-bye.
And those are the biggest stories this trading day, September 13, 2021. Catch Businesswolrd live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos and we are One News. Mask on, wash hands, and stay safe, Philippines.